Quiet day, but we're hanging on by our fingernails here. So if we take a look, we did do the undercut and then we just kind of bounced back and stayed in the same range. I would expect that kind of behavior to continue until there is some results on the election. You can see how we're just sitting right on that level, and that takes us back to that July 11th level right in here, which was that negative CPI report. Look at how we're holding in here. We have two huge headlines that hit today we have to go through, specifically with nuclear energy and what's going on in the AI space. Then I think it's going to reshape it a little bit here. As always, subscribe to the channel, click all notifications. What we go over here is extremely timely and actionable, so you don't really want to miss it. So if we see the level here, we just see the doji, doesn't really look like much, right? And then we're just gonna do the simplest thing and just drop in the moving averages. I use a 12, a 22, and a 55. You should use what you're comfortable with. Get rid of the vol for a second, and you can just see we're just sitting here at that institutional level and building, but we are gonna get that 12, 22 cross, which is not the greatest, but it's not the end of the world. Sometimes you get those and then you trend down, and it is the first sign, of course, that you're going to break your 55. But sometimes by the time that they flip and they break over, it's already a lagging indicator, and quite frankly, it means nothing. So I don't know how much it's going to mean. What we really need to see more than anything is the results of the election. And that everybody's just on pins and needles waiting for that. It's not even so much who gets in, and I know I'll get tons of comments on this, but it's really about just getting the finality of it and getting it behind us at this point. Now, if we take a look at this from the simplest way, we can see really very clearly, in my opinion, that you have just hit a level right here, and then all we're doing is just bonking on it left and right. And then we just got to that point where we broke. And I think that's important. I think it's important to understand that. So did we break? Yeah. So you have a trend line and you broke it. What does that mean? Well, it doesn't mean you're going to come down and retest it, but it does mean that that is your upper trend is broken, and that is a rising wedge. You broke through a little bit here. If you do something very simple and just look at RSI and you look at that on the weekly and just go, okay, well, where does that put us? Clean all this off. It does give us a negative divergence here. And I tend to not use the moving average myself. So for the sake of this, I'm going to take it out. And I just want to show you this because I do think it's important. And it does exist and it is happening. So I think to pretend that it's not happening is silly. So you have to look at what's actually happening and then kind of make your own decisions about it, right? So you see it right here and you see that negative divergence. You could say it's something, you could say it's nothing. You could say we had another one back here and then we did this, and I would say you're right. So the macro side of this could take this over. It could be absolutely nothing. We just don't know right now. So how do I feel about that? I feel like you have to watch this play out. I feel like there's a macro event coming called an election, and we have to see how that goes. Other than that, when I look at this, this is pretty nasty stuff, because not only on the daily are you breaking down here, but you're already breaking below this level. So now we're breaking below the neutral line, and now we're getting to oversold. And usually when you get to oversold, you have to get down to this line. You need something cathartic. And if you take a look at it, it is really rare. And we'll go back just so you can see what I'm saying. And I'll go back to 23. But it is really rare to just stop, go back over neutral, and not hit here. It's very rare. You usually, when you break the neutral, you do tend to glide back down and get to an oversold of some kind before rallying again. And I think that that's pretty clear that that's which way we're heading here at this point. So especially the fact that I'm now in line or below this previous level, which is not really where you want to be. You don't want to be aligned with this, taking out a low, and you're still up there. It's actually setting you up. So the question really is how much of this is factored in and how much is an election. I'm going to go out on a limb and say a lot of this is the election, but we did crack. And no matter how you look at it, this did break. Now, the bigger issue for us is where are the big guys at? And the CTAs are right around that 57.44 level. So if we start breaking 57.44, which we did today, you started seeing a little bit of pressure, and then they kind of had that feeling of like, okay, what are we doing? So what I would do is watch the level that I just mentioned, and so we'll see the 44 level, and I'll show you what I mean. Once you got to this level, you're starting to see like this acceleration into it, right? Okay, and you drop down, tries to rally, and it's more of an area than, that's what CTAs look at. They're not going to give you an exact number. So what we'll do is we'll just drop it to those two pin levels right there, and we'll leave this on. And then what we'll do is we'll just drag this over. And what's becoming really clear is where your net buyer is, isn't it? So you have that CTA level where we know we have a seller. It's that 744. That's when their acceleration of CTAs will pick up. And that's fairly accurate for people to kind of figure out and know where that area is. What I think is more important is what we can see is where that net buyer is on the index of itself. On the futures market, you can see that it's right here, and you're sitting right around that 57.38.25. So if we crack this tomorrow and we start bonking on it, we could know that resistance, or support rather, has become what? Resistance. And I think that that's important. Let's take a look at the NQ. Now the NQ to me is even cleaner and more fascinating. And what you can see right here is that July 11th level again. And for those that are new, I do look at the macro data in great detail. And you can see that break coming across, break, down, break, flag again and again. And you cannot get over that level. Now you have that CTA sell zone right here. It started on the 17th and just came across. You started the flip over, test, 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 and now you're back in it. You get on the other side of this, they're going to start selling again. And you can start seeing where that's accentuating. Now, are they going to do that if we get a really quick, see how you're holding right in there? You're holding on by your fingernails, guys. So are you going to get that pressure? Are we going to get that pressure if we have a quick election result? I don't know. And I'm going to say this, I don't know that it matters who it is, just that we have it and it's over. That's what I think. So whoever wins, the best thing for the market is that it is clear, it is not debatable who won, and that is the end of it. So now what we're seeing is we're seeing that rally up, and then we're seeing how we can sit right in there, down, up, down. It doesn't really get any clearer than to watch that CTA zone right there, and that this trend line sitting there. Overlay the simplest again of just indexes and just watch the 22, the 12, and here's the 55. Let's get rid of the vol because we don't really need it. We know that the vol's light, and take a look at what's going on there. Is there something else there that we would really have to look at? Look at the simplest things again and just say, well, what's going on with RSI? You're cracking. You are cracking. And so is rate of change. So when we look at rate of change, what we're not looking there, and this is the big thing about rate of change, and I'll show you this. I'm going off on a little bit of tangent because I want to cover these two things, but this is really important. It is not possible for the market to go up and have a negative rate of change. You'll never say it, but you'll literally never say it. So is it something that you want to use that as an indicator? I use it from the standpoint of, do I want to hold my longs overnight? Do I want to bet against things like, just like we used Bollinger Bands on Saturday? I'll link that video at the end. But if I'm down here and I have a negative rate of change, it means the market is going to have a negative rate of change. I'm trying not to laugh at how obvious it is. When you understand what these things are and you break a zero line, for example, if you just look at it here, I'll click this over and you'll see what I'm saying and why I'm laughing. But just stay in drawing. All right, you broke the zero line. What happened? You went lower. You broke the zero line. What happened? You went lower, right? Now, when you break the zero line and then you stay on there, you might go higher, right? That is possible because what? You didn't break the zero line and you broke the zero line. What happened? We went lower. Okay, we broke the zero line to the upside. What happened? We went higher. Well, if you have a positive rate of change, you're probably not going down, right? Just as if you have a negative rate of change, you're probably what? Not going up. So if you just look at this stuff for what it is and you understand how this stuff is calculated, sometimes it can just be really simple. And does that mean that you should not have a long bias or a short bias? What it means to me is that if I see something like this, and I will clean this all off, but what it means to me is that if I have something like this, it just gives me pause in saying, okay, do I really want to carry my new longs overnight either way, or do I want to carry my shorts over? And tonight, for me, it was pretty clear that I didn't. We also did this with the bands the other day on Saturday. And if you want to see that, just watch Saturday's video, I'll link it at the end. And my point being is once you break the median line of the band, I don't really want to go near it. And somebody said to me today, they were laughing, they're like, well, that's not how I use it. I really don't care. You should be using these how they're effective for you, not how somebody else uses them, right? That is the most important thing about technical analysis. Technical analysis is a skill and it's an art, and you need to look at it that way. Just because I use it one way and you want to use it another does not make me right or you wrong. It's really interesting. I'll give you another example of this. Today, someone was saying, you're never supposed to hold into earnings. You're always supposed to get out before earnings because of the risk associated with earnings. Well, if that's the case, then someone would point to this and say, well, this is why I got out, because of the risk associated. And then my response is going to be, how did you know what was going to happen? We're going to address that news in a second. And no matter what you find to fit a rule or a thesis, I can find something else that's just going to change it. So this is why I always hold into earnings, because PLTR is breaking out and being up $7, right? Or this is why I always hold into earnings, because These names, where is it? ALAB, right? These names always, good names always break out and go higher. See how you're making a statement that is just set in stone when I use the word always, and I'm being very rigid in saying I always do this because this always happens and I want to reduce my risk always. Why do you want to reduce your risk if something's winning? It's just silly. Why would you do that? Same thing falls in line with CEG and these other names. Like, well, yeah, you could point at this, but for every data point that someone can give you, I can give you another one as to why. As a matter of fact, Goldman just did a study that I went over parts of it, and I can get more into it, on why you should hold into earnings. So do I want to listen to Goldman's 14-year study or Freddie Fingers on Twitter, right? So you have to think about it that way, and maybe Freddie Fingers is right for him. So you have to look at what it is. But when you look at these indicators and oscillators, they are what they are. What is not debatable is objective information that comes out about a sector. For example, what happened with uranium today and why it got smoked. Let's get to it. Now, the news today was pretty telling on the way that this is heading. Nuclear energy is supposed to be the big thing, and of course, the regulatory issues have to approve it, meaning every little county that has something associated with this has to approve it. Every little area has to approve it. And what you're seeing is FERC rejects Amazon and Talon, AMZN, and TLN, and obviously we're going to get to those in a moment. But if we take a look at that, redirecting significant amounts of power from the regional grid could lead to supply shortages. Now, David Tepper brought this up about 2 weeks ago when he was on CNBC. And the comment was that all these deals are going to have to go through all these agencies, such as the Public Utility Commission, etc., and of course, Federal Energy Regulatory Commission. Rejected an effort on Friday to allow Amazon's data center to tap into additional power from a nearby Pennsylvania nuclear plant. The decision could throw a wrench in efforts by large technology companies to secure so-called behind-the-meter power from nuclear plants as they seek to meet the growing energy demands for artificial intelligence. So the plan was, we're going to tap into these sources that are not being used, and then since they're not being used, we're just going to pay for them and all that power will be ours. That is kind of starting to run into a foul, and what we're seeing is just a massive sell-off in this entire sector today. But it could also be a problem for AI data centers in general, but we are seeing another sector move on to that. We will get to that. Let's just focus on this for 1 second. In a 2-to-1 decision, FERC found the regional grid operator PJM interconnection failed to provide that the changes to the transmission agreement with Susquehanna Power were necessary. Regulators, 2 Republicans said no, 1 said yes, and that was a Democrat. Co-location, it's kind of interesting to bring this up now considering the time of the election and how this might go depending upon who's in office. So I'm bringing it up because what they're suggesting is Democrats would say yes, Republicans would say no. I'm not sure I agree with that. I think a Trump administration is going to do a ton of deregulation, but we'll see. You never know. Co-location arrangements of the type presented here present an array of complicated, nuanced, multifaceted issues which collectively could have huge ramifications for grid reliability and consumer costs. Christie wrote concurring statement. Dissenting, Phillips argued the deal with Amazon represents a first of its kind co-located load configuration and that Friday's decision is a step backward for both electricity reliability and national security. So I'm not really sure how he's getting there on that. But I think that they should. I mean, you guys can comment as much as you want. I think they should have to pay what we pay for power. And they should be entitled to have their own power sources if they can afford it. But to tap into existing ones and circumvent the system seems to be an issue. I think the CEG one's a little different because that's offline and Microsoft's bringing it online. But I'd be interested in your comments. We're on the cusp of a new phase of energy transition, one that is characterized by soaring energy demand due in large part to AI, rapid changes in resource mix, Phillips wrote. Well, just because you want all the power at a specific price doesn't mean that you should get it. And I think that that is kind of going to be the issue here. Now, what you see happening is Amazon purchased 960 megawatt data center right next to the Susquehanna power plant for $650 million earlier this year. So they're going to be able to tap into it. The question is at what price, and are they going to find a workaround around this? And this is what's sending the entire thing into a tailspin today. It's also going to hurt the data centers, the nuclear energy. It should hurt some of the other companies as well, as we're going to take a look at. But we're seeing a couple actually benefit. Now, this is where it gets interesting. Following the announcement, PJM sought to increase the amount of power running directly into the co-located data center. So they want to increase the amount of power running directly to that center. However, the move faced pushback from regional utilities, including Exelon and American Power, which is kind of interesting. The utility companies are saying, not so fast. And that's kind of interesting that you might see a battle of the wits here between these energy companies. Tech giants have increasingly turned to nuclear energy power. Last month, Google announced deals to purchase from small modular reactors to be built by this company, which I don't think they're even public. And if they are, it's a tiny little company. I've been watching some of the others, OKLO, SMR. There's a litany of them. Just days later, Amazon revealed a series of deals in advanced nuclear reactors, including with Northwest Energy to build small modular reactors in Washington. Where this might lead is it might lead to these companies building these data centers in areas, not Pennsylvania, in areas where they're allowed to do this, where they have more sway to do this, which is kind of interesting. Does that mean that it's a Democrat thing and that you're going to see this more in California because they seem to be for it for now? I don't know. I'm interested in your comments on this and how this plays out. I think it benefits a couple different sectors. NVIDIA is moving, but it might be for a different one. Now, these are some of the reasons why I shorted CEGVST today, right? And am I going to stay short that into earnings because I'm right and it's going to be bad? No, absolutely not. So you have to look at these and make decisions. Like for me, even with PLTR, just being candid, this was something that I got out of when it broke here. I think I got out at like 41.5 because I didn't want the risk of earnings on this one because I was concerned about the market going into the presidential election. I bought it and traded it after hours, and maybe I missed $3 or $4 net. So what? After the conference call, and by the way, they crushed. Absolutely crushed. It's probably going to be a really good conference call, and it's probably going to have a really good day tomorrow. We'll go over that pre-market, so you may want to watch that. But this was really good. Just like HIMS. HIMS was not great at all, but their guidance was really good. And the fact that they're guiding higher. So it always depends, right? And that's what's so important about this information. Just like when you read like SMCI, when you read the SMCI information and how NVIDIA is distancing themselves from them, that's up to you to decide, is it good for NVIDIA or bad for NVIDIA? It's objective data. And then what happens to the stock is up to you. Okay, and that's a really important concept. I'll give you one more, but take a look at what happened today with NVIDIA and SMCI data. This is a much bigger story than it seems. NVIDIA steps in to restructure Supermicro orders, reshaping AI supply chain. And this hit Monday, hit today, and I think it's important. So this is DigiTimes. DigiTimes is pretty much the standard in everything technology. It's probably worth getting a subscription to this, even the free version. Just get it in your mailbox so at least you can see what's going on in the world, even if you don't get the most time-sensitive one. I just ripped this right from the headlines, but it's really important stuff, especially if you trade tech names. And they just comment on the fact that in 2018, non-compliance, financial reports once again found stuff in turmoil. They have to November 20th, the 20th, to file their 10K, which is different than a 10Q. So let's take a look at that. Now, this is written by somebody else that is not DigiTimes. I think I have the link to where this is in one of these other clips, and I'll show it and share it. But they're diverting orders away from Supermicro as a potential delisting and DOJ investigation loom. So let's just go through a couple. I do want to be clear about this. I do have a short position in this. But if you look at what their issues are, you have a delisting issue. You have a Department of Justice investigation. You have their current biggest lender saying we want you to put money in the bank that is secured only by us so that you don't break your covenant, which they just did, and extend to end of the year. Their auditor quit. You cannot file a 10K without an auditor. You can file a 10Q without an auditor, but 10Ks need to be audited. And I'll show you the language in a second here. So you have a lot that needs to happen in 12 days, and I'm not sure how that's going to happen without them getting delisted. But nevertheless, understand that for NVIDIA, who has a very close relationship with SMCI, to say, hey, we're not giving you any more product, or we're moving the product away from you so that we don't get stuck with a bill. That's a really big sign, and for the stock to not move on it is kind of silly. I don't think the street really understands what's happening here. We saw something similar. If I could give you something similar, I saw something similar happen with WorldCom, where the vendors just stopped dealing with them. They did not want to deal with them because of the delay in accounts receivable. I'm not saying that's going on here yet, but this is an issue when the biggest company in the world with the best tech is saying, yeah, we're not going to keep giving you the product that you're selling to make all your money with. It's a problem. To pretend it's not a problem, it's a mistake. I'll just leave it at that. A retailer of high-performance servers, liquid cooled AI racks, is NVIDIA's third largest customer. I was always concerned about the risk spreading. The fact that they're getting away and distancing themselves is smart. Additionally, what a testament here for symbiotic relationship to entities. Biggest client is NVIDIA. SMC, biggest client is NVIDIA. And its second biggest client is an entity that is backed by NVIDIA. However, it appears that NVIDIA has had enough of Supermicro near constant headaches and is deliberately trying to create some much needed distance. And to point this out again, the bank was able to move the date, warned SMCI, failed to file request annual report by the 16th of November, could come as soon as the 20th of November, meaning they could be delisted again. Now, this is again different than what the bank said. Cathay Bank, the firm now required to furnish audited financial statements by the 31st. So audited financial statements would be, think of an annual report, was probably what they're looking for, like a 10K. If you can get a 10K together by then, that's doable. I don't know if they're going to be able to get a 10K together by the 18th. And this is something that it's an issue. They had to post money up, change the covenant, which was supposed to be by October 28th, and they had to put up $150 million. And for those that don't know the difference between a 10K and a 10Q, a 10K is the annual comprehensive report filed by publicly traded companies with the SEC detailing their financial performance and business operations. It includes audited financial statements, management discussions, and analysis risk factors, blah, 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 blah. Just ripped from the headlines of the internets. What's important about this is you pretty much need to be audited, and they don't have one. So how this gets done by the 18th, or the 16th rather, I really have no idea. So I hope this is something that you guys get. Just like here today, PACS, this was something that when it hit the tape, I didn't care what it was. We just shorted it. I saw it hit the tape, and as soon as it did, we were shorted it right in here, and then we just found another level. Just rule of thumb, guys, I go over these concepts a lot. I'm going to do a video on this one because I get asked a lot to show how to do like earnings calls and VWAP and how to trade it. But really, let's get rid of that. I'm not going to have time to edit. What we're going to have to do here, I'm laughing because they made me a meme that says I don't have time to edit. But what they're trying to do here with these kinds of things is you want to mark off key levels. So you're marking off here, which is when the news dropped. Once that news dropped, you couldn't get over that level, and so this gave you clear indication. There's something else I use, but with a volume profile, but how I tie it to the stock's a little different. But what this was is, boom, it hits, we're in, we're short. Why? Because the news hit the tape. And this Hindenburg, that was the whole news. That was the entire reason for shorting it. Didn't read the report, didn't know what the company did, saw the news, and everybody wants to be in the next Hindenburg one, whether it's going to do RBLX or it's going to do SMCI. They have the hot hand right now, so everyone's going to be in their names, right? So what does that do for us? It allows us to just know to get in because we know how to read the news and we know how to enter and then protect our risk, whatever. But what does this mean? Where am I going with this? The same piece of information someone else is going to look at differently. Someone else is going to look at that information and say, Hindenburg's a dumpster fire. They're never right. They were only right twice this year on IEP and SMCI. They were just wrong on RBLX, and they made a lot of money going long. And they're buying this down here, and they're watching something like RSI, and they're just foaming at the mouth, watching it cross and seeing that this positive divergence, and they're going long. And we're scaling out into this, but they went long and they made money. Same piece of information, same way that you would look at a piece of data that's telling you the same thing, two different reads on it completely, both people made money. So how you use Bollinger Bands, how you use information, whether you sell before or after earnings, the only problem that you could say is you don't want to be set concrete and use the word always. You want to be fluid, be like water. That's it.